get busy on the market today. Right? We have had a very long last 2 days, a very long trek upwards. We have busted through the top of this channel that I drew yesterday, and we've gone above the gold SMA. So this might tell some people that we are in a recovery, but I am not willing to say that quite yet. And you can kind of see that after this uptick from yesterday, it has developed possibly another low. This peak is this peak right here. And this peak is lower than this peak here. So that tells us that you can see that on the RSI as well, but it tells us that there is beginning to be a loss of momentum. And I would not be at all surprised, because after a long uptick like that and a downtrend, which is heavier, it weighs heavier on what's going to happen in the market, I think we are in for a drop. But on the short-term chart, we are still kind of on this up leg, and it's a little bit iffy as to whether it's going to drop. I am inclined to think so. And the other thing that you can see here is the Fibonacci lines. And I had predicted yesterday that it would get at least up to this 100% line. And you can see that it kind of hesitated at that point right here, kind of near the end of the day. And then it went through it overnight to a point and then came back down to it. So that line is significant. It seems to be interacting with it pretty well. So it did bounce off of it, and that is something to consider. But like I said, the peaks are lower. So anyway, when it dropped down here to this point, I decided to go ahead and do a short at this point. And one of the main reasons was, even if it was just a very small movement, I felt like it was, the MACD was telling me that it was going to drop here. And so I thought it was a pretty decent move. It was definitely iffy looking back on it. It was not I would say it wasn't even an 80% trade, the likelihood of it being good. I would say it was more like a 60, 65, maybe 70. So it was a little bit more risky, I think, than I realized. So I put in my exit order here at the gold SMA, which seemed to be a good support. I did think it's probably going to drop even further, but trying to be conservative. It did drop down a bit, and at one point I could have gotten out at like $300 profit. I did not. I put in a stop instead and waited for it to go down, and it actually went up and stopped me out. So I only made 150 on that first trade, which is pretty good still. But for 2 contracts, that is a little low. So then I waited for it to have this little uptick to see how far up it would go, to see if this was just another down part like this right here, and it would just continue up. But the MACD is still looking like it's descending. The RSI is still losing momentum. And then we developed this red candle, at which point I decided to get in another short. The red candle turned into a green one, went up just a little bit further, and then it started to drop again. And I decided to put in my exit order down here on this 100% line, just to be extreme. That was like the point where I kind of thought it might go eventually. Like I said before, I don't often get out at those points. I tend to get out when it hesitates. So we can see that it dropped down to the gold SMA, where I thought it was going to go in the first place. And it does hesitate there a little bit. And then it drops down to the blue SMA and then bounces off of that point as well. And then it kind of hesitated again, and it was a little bit iffy. I wasn't sure how it was going to interact with that blue SMA. And I decided I just didn't want to risk it. And I got out here just below that blue SMA, even though as we look at the screen, we're definitely seeing a drop, and I could easily see it dropping down to that 100% line, which also coincides with the gold SMA down here. We can also see, just backtracking a little bit, this point right here, it was acting as the gold SMA was acting as the resistance line for that. And so you can see that it went up a little bit beyond that, but the wick was not sustainable and it dropped. So that was definitely a resistance line. So that also tells me that, yeah, we're in for a drop here soon. So anyway, I got out here, and the second trade, I think that's what happened. Let's see. Yeah, I got out. I think I immediately got back in again. Yeah, because here I'm in a short again. So I could have held on there, but I decided to play it a little bit safe and do it in 3 trades, I guess. So I don't know, maybe that's not playing it safe. Maybe that's something I need to correct. I'm not sure. So I got into another short here, and I was also looking on my phone. I was kind of watching it, and I have a 2,000 tick chart. And the blue SMA was actually down here at 5111. So that's where I put this order, or just below that, or, you know, and it's also kind of the bottoms of these candle bodies here. That was also the place where I put my order here. And that seemed like it might be a pretty reasonable place to go. Raised it up just a little and got out. And in 3 trades, I made 825 minus commissions. So you can see right here, you can see the trades that I made, and they were all positive. So very happy with that. All right, so let's do something a little different today, and let's go to the live chart and just try to make some predictions as to what we see. Okay, so let's start with the 180-day 4-hour chart. And actually, I'm going to go ahead and change out this Fibonacci line. How's the easiest way to do that? So we want to, let's go ahead and get rid of it first and see our chart. All right, so we can see that the turnover on the 4-hour chart here has developed pretty good. We can see 2 red candles here, and we are definitely heading down at least to this gold line. So, okay, so the first thing that could happen is that gold line could act as a support. So let's go ahead and put in a price line there. And I like to make it the same color as the SMA that I am basing it on. So I'm going to make it gold. Okay, so how it interacts with that line is going to be hugely important. And you can also see on the MACD on this 4-hour chart, we are losing momentum, as well as on the RSI. Okay, so those tell us that, yep, we're in for a little bit of a downturn. How much of one is yet to be told. I do think it's going to at least go down to that point. And if you look on the main chart here, that's not that far away. So when we get to that point, then we can see the next step. My guess is that this channel that I drew, and back it up so you can see it a little bit better, this channel here is still not obsolete yet. It's been stretched, but it's still in play. And my guess is that we are going to get down to the bottom of that channel. And that is going to be a big, big drop, because where we are right now is about 5110. The bottom of the channel is less than 5,000. So we're talking over 100-point drop. That's pretty big. And, you know, of course, it will probably hit this point right here, which is the midpoint of the channel, because that's the bottom of these candles here. And it will probably hesitate at that point. And then we can see how it interacts with that. So we'll go ahead and put in another price line right through there. Okay, so how it interacts with that line is also going to be important. And then, of course, this one down here, which is the lowest that it's been for quite a while. It's that wick. So that's another point that it will probably bounce off of a little bit. We'll see that. And then, you know, and if it gets past all of these, then the likelihood of it dropping down, you know, to this point right here is pretty good. So going up, we could definitely see it going up. But if it did that, that would be major, major, major change. it would get up to the blue SMA here, and it would also be an indicator that we are done with our little dip here, our recovery, and it will probably continue up. And that's not completely out of the question, but I think it's less likely, because if you look at the longer term chart here, I don't know. I will have to just see, I guess. In a presidential year, when we have a presidential election, there's so much uncertainty in the market, in my experience, because now I've been trading for over 4 years, and I've been through one cycle already, and I saw a lot of uncertainty in that year. It doesn't matter what your politics are, it doesn't matter how it's going, it's just until that vote has been placed, people don't know what direction we're going, and the market tends to react very wildly. So, I mean, it's just kind of a personal feeling that we're in for a little bit bigger dip than that. And if you go out and look at like the 1 year chart, which I rarely do, you can see that we have been in a recovery mode, steady upward recovery mode, since October of, was it last year, I think. So that's a long time to be in an upward movement. Okay, so let's look at the 1 year chart here. You can see that, this is kind of a recovery point here. It went up and then it kind of dropped down and then it decided to go up again. So it may be something like that. You may be, in a recovery mode, something like that. It's about 11% drop from here to here. And so that is pretty typical, like a 10% correction is pretty normal. But if we're looking at this one up here, what is a 10% drop of 53.37, dropping down to 48.04, 48.04, right in this area right here, I would not be shocked. And it won't do that overnight, and it probably won't do that all in one leg down, and it probably won't do that sooner than, a month or so. It might be this whole summer that it drops down to that point. That's not saying that it will continue to drop after that point, or that our market is crashing or anything like that. It's just that, the market does need to have a breather sometimes. It does need to have a correction. And so this is the beginning of one, I'm believing. I don't think it's the end of one, but we'll see. Okay, and then if we zoom in to the shorter term charts, we can see that the 15-minute the MACD is showing a death cross and looking like it might drop some more. This has dropped already and is showing a loss of downward momentum. However, it hasn't, okay, so the last two candles that have developed here have actually started to gain momentum again. So it's, and you can see why. It's because it has gone down to that gold SMA right here. And I'm going to go ahead and draw another candle here, or not a candle, a line at this point to show that. All right, so this line here is the gold SMA on the 30-minute chart. This gold line here is the gold SMA on the 4-hour chart. And you can see that we are sitting right on the SMA for the 30-minute chart. So this is going to act as support for a little while here. You can see it's kind of bounced off of it twice. The first one, it hadn't quite touched it. So now it's actually touching it. And so again, how it interacts with each point as we go down says volumes. And you can kind of predict the next leg. So that's how I make my predictions. And you can also see on the very short-term chart here, we are looking at a little bit of a bounce here probably, because the MACD is down and tipping up, about ready to cross going up. So it's probably going to go up. And so we look at, okay, where's the next resistance level up here. Where is it possible that it would go? And there's two places that I can see here. It would be this one here at 119, and there's this one here at 116. 119 is like right in here, and you can see that there's a cluster of candles right here that's pretty flat. So this is sometimes they call them supply and demand areas, where there's a lot of orders that are placed right at this point. And so I could easily see it going up to this point right here. So let's just watch it for a little while and see if that prediction is true. In fact, I'm going to go ahead and put a block right there. All right, that's my prediction. You can kind of see, on the short-term chart, originally we had a peak here, and a peak here. Well, that kind of became obsolete when we broke through that. Now we've got to look at the longer-term time frames, and now we've got a peak here, and we're forming a third peak, and it's very critical where that gets formed and where it starts dropping from. So, and if that were true, that it was going to go above that, then we'd have to go to even a longer time frame. So each time our predictions are a little bit wrong, we kind of back out and look at the bigger picture. And then once we are sure of where it's going, a little more sure, I should say, you're never 100% sure, then you can kind of zoom in, and that's when you can trade. It's kind of a good way to summarize the way I look at it. Anyhow, yeah, I would say if you're trading today, just be really cautious.